Hello everyone. Welcome back to the series Become a US Tax Professional. In chapter 1, we built the foundation of the US tax system. We learned how taxation in the United States work at three levels: federal, state, and local. And we understood the overall structure of the US tax environment. But now very important question arises: who actually runs this system? Who collect the taxes? And who checks whether taxpayers are compliant or not? This brings us to Chapter 2, the role of IRS and US tax administration. In the United States, the tax system operates very differently from many other countries. It is built on the powerful concept of self-assessment system, where taxpayers calculate and report their own taxes. Because of this unique approach, the government needs a strong and the structured authority to administer the tax law, to process the million of tax returns, to issue refunds, to conduct the audits, and to enforce the compliances. And that authority is the Internal Revenue Service, which we normally called as IRS. In this chapter, we will understand what is the IRS and why it exists, how the US tax administration system works, how taxes are collected and enforced, the life cycle of a tax return from filing to audit. By the end of this chapter, you will clearly understand the backbone of US tax system, the IRS, and we will have complete understanding on the US tax administration. So let's begin and move to the first agenda slide. Okay, so the key agenda item that we're going to cover as part of this chapter is we'll quickly have a snapshot on what we're going to learn in this chapter. We'll have a look and a complete understanding on the concept of US tax administration and overview. We'll understand what is IRS and why IRS is required. Then we'll have a look at the state administration, followed by we'll also have a look at the local tax administration. We'll quickly run through the concept of self-assessment system and the third-party reporting forms. We'll have a quick look at the tax collection process and the tax returns filing and the refunds. And then we'll also have a slide on the tax planning basis the IRS and the US jurisdiction overview. So we'll move to the next slide then. Okay. So what we are going to learn in this chapter is by the end of this session, we will able to understand how US taxes are administered, the role of IRS versus state versus local authorities, administration of all tax types, concept of the tax collection life cycle, and compliances to the notice and the audits. So this chapter is going to give us a complete understanding on the key learning objectives that we have listed here. So let's move to the next slide then. Okay, so now that we understand how the US tax system works, let's quickly have a look at how it is administered. The United States operates one of the most decentralized tax system in the world. And what does this mean for us? It means tax administration is not controlled by a single authority. Instead, it is divided across three independent levels of government. And each government has its own tax laws, authorities, and compliance requirements. At first level, we have the federal government. At the top level, we have the Internal Revenue Services, or IRS. The IRS administer the federal taxes nationwide, including federal income tax, payroll taxes, corporate taxes, and every taxpayer in the US interact with the IRS. At second level, we have the state government. Each of the 50 states has its own state revenue departments. These departments administer state income taxes, state sales taxes, state business taxes. So depending on where you live, your state tax obligation will differ. At third level, we have the local governments. At the local level, thousands of cities, counties, and school districts have taxing authority. They mainly administer the property taxes, local sales taxes, city level income taxes if they are applicable in some cities. And then what does this mean to us? This means that one taxpayer is having the multiple tax authorities. A single taxpayer may interact with all three levels of the jurisdiction. For example, the IRS for federal income tax and payroll taxes, the State Department for state income tax and sales taxes, and the local tax offices for property or city taxes. This creates what we call as a multi-jurisdiction compliances, which is a key feature of the US tax jurisdiction. To understand the scale, federal government, we have one federal government, 50 state governments, we have over 70,000 local taxing jurisdiction. And this is the reason why US tax administration is considered complex but highly structured as well. And if we have to quickly look at some of the key characteristics of US administration, so the system is built on the multi-jurisdiction taxation, annual filing of the tax returns. It is the concept of the pay as you earn withholding, and it has extensive information reporting as well, which is backed by the strong audit and the enforcement framework. So this administrative structure forms the backbone of the US tax system and explains why compliances play such a critical role in the US taxation. So we'll move to the next slide and look at the federal government and see some of the areas at which federal government is applying its jurisdiction and how it is being managed and from for what purpose the funds are getting utilized. So we'll move to the next slide. Okay, so we'll talk about first about the federal, and when we talk about the federal, we normally have to look upon the IRS. So IRS stands for Internal Revenue Services. Okay, now we are talking about the Internal Revenue Services. So the IRS is the Federal Tax Authority of the United States, and this is the nationwide tax authority that operates under the US Department of the Treasury. So it's equivalent to the, if you call the income tax department of India, which is being controlled by the central government. And likewise, this particular IRS is being controlled by the central government, and they have certain set of the taxes which they normally administer. So its primary role is to enforce the federal tax laws. So all the federal tax laws is being administered by this authority, and it's not being bifurcated specifically into the direct tax or indirect tax. Like in India, we have a separate set of the body that looks after the income tax, and then separate bodies there which looks after the indirect tax. In US, there's only one federal IRS. Or IRS is the main department that enforce various federal tax laws. So in simple term, the IRS is the US equivalent of an income tax department, and it's also equivalent to the let's say GST department for that purpose when it is being administered centrally, specifically when we talk about excise or the customs. So the US government require fund to operate and provide national services. So taxes which is being collected by the IRS is largely to ensure that these are funding the national defense and the military, Social Security and the retirement benefits, Medicare and the healthcare programs, infrastructure and the transportation, education, research, and the public services. When we talk about the key sources of the revenue which is being required to manage all the above expenditure, so key sources include individual income tax, payroll taxes, corporate income tax, and the excise taxes. The IRS collect trillions of dollars annually. And as we move further in this discussion, we are only going to concentrate on the federal taxes because these taxes form the basis of the main source of revenue, and we are going to concentrate our entire understanding of the US taxes depending upon the knowledge that we are going to get from the federal tax. So when we talk about the key functions of the IRS, the key function is to collect the federal taxes, process the tax returns, issue the tax refunds, provide the taxpayer guidances, conduct the audit and investigations, and ensuring that whatever has been collected that has been properly utilized, and also ensuring that enforcement, tax compliances and penalties, conduct the audits and the investigation. So typically all the function which is being required to be performed by any tax jurisdiction is being managed by the IRS, which is at federal level. Now we'll move to the next slide and look at the same jurisdiction applicability at the state level. Now, having understood the concept of federal taxes and the department of IRS, we'll now talk about the similar kind of administration of the taxes which is being done at the state level. We know that each state has its own jurisdiction, and we have close to 50 states, and each state has its own state department to manage the administration of the taxes that is being imposed at the state level. So each US state has its own tax authority responsible to administer the state taxes. These agencies operate independently of the IRS, which means that this is another set of the compliances that one has to comply if he or she resides in a particular state. This administration looks into the tax laws, filing requirement, forms and the deadlines, audits and the enforcement procedure. So example of the state tax authorities are like California Franchise Tax Board or New York Department of Taxation and the Finance and the Texas Comptroller of the Public Accounts. These are some of the name that has been assigned to a particular tax jurisdiction or authority which is being which is managing the tax for that particular state. Which is like California, we have California Franchise Tax Board. For New York, we have New York Department of Taxation and Finance, and for Texas, we have Texas Comptroller of Public Accounts. And why this is required? Because each state government needs to revenue to fund their state level public services, such as public schools and the universities, state highways and the transportation, state police and the public safety, healthcare and the special program, and environmental and the economic programs. And the major sources of revenue for state is the state income tax, state sale tax, state unemployment tax, state excise tax, vehicle registration and licensing taxes, state business and the franchise taxes. And if we quickly look at the key function at the state level for the state administration is to tax collection, processing of the state tax return, issuing of the refund, audit and compliance, enforcement and penalties, and then taxpayer support and the guidance. So this is kind of an equivalent of the administration agencies like IRS, which is at federal level. This is an equivalent of that in the state level, and they do the largely the same set of activities which is being done by the IRS. Now we'll move to the third set of administration, which is the local administration. Okay, now having understood the concept of IRS, which is federal level, and then the state administration at the state level, we also have another level which is called local tax, local tax administration, which is being managed at the local level. And we, in the opening slide, we already showcased that we have close to 70,000 plus local tax administration bodies that has the taxing jurisdiction power, which means that they tax at the local level, and then they have to ensure that the tax has been collected should be utilized for the purpose for which they have been collected for. So local tax administration is handled by the cities, counties, township, and the school districts. These authorities manage the taxes used to fund the community level services. So example of local tax authority like county tax and the assessing assessor officer, city finance revenue department, municipal tax collector, and the school district tax officers. Local government operates independently from the IRS and the state authority, which means that this is the third level of the tax administration. Local tax revenue fund services people to service people are used for the everyday services such as the public school and the school district, roads, street lights and the sanitation, police and the fire departments, parks and the community services, and the local infrastructure and the housing programs. And the major sources like property tax, local sales tax, city income tax, business licenses, property transfer taxes, hotel occupancy taxes, utility and the service taxes. So all these are taxes which is being imposed at the local level, being collected at the local level and used to manage the day-to-day services at the community level. And the key function is largely in line with what is being mentioned in the last two slides, which cover the IRS and the state level tax administration, which is like property valuation, tax assessment, tax billing collection, local sales enforcement, and delinquency management. So typically, collection of the taxes, providing guidance, and making sure that any customer kind of grievances and the should be resolved, and ensuring the tax compliance at the local level. So all these are the functions which is being led by the local tax administration. So with this, we have understood the concept of IRS, we have understood the concept of state level taxes as well as the local taxes, how they are getting administered, how they are getting managed, and there is a separate authority that has been created at each of the jurisdiction to manage the various taxes that is being imposed. So we'll move to the next slide. Okay, now we'll talk about the concept of the self-assessment. So in US tax system, largely the income is being self-computed, the tax is being self-computed, and it is being processed once the income is computed, the tax assessment is self-computed and it is being filed by the assessee, and then it is being monitored at the later stage. And if at all there is no due or refund, then it is being self-assessment is completed. But if there is some challenges, then it has to be managed at the administration level. So US tax system operates on voluntary compliance with the self-assessment. This means that taxpayer is responsible for calculating their own taxes, filing their returns, and then paying the taxes on the time. Government authorities verify after the filing. So for federal, it is being income tax, payroll, corporate tax; state level, state income tax, sales tax return; and the local, the property tax declaration, local business taxes. So how self-assessment cycle works is that earn income, conduct the transaction, salary, business income, property ownership, purchase, calculate the taxes, taxpayer determine the tax liability using the tax rules and the norms, file the returns, return filed by the IRS, state or the local authorities, pay the taxes, taxes paid by withholding, estimated payments or the direct payment, and then the government verification is authorities cross-check and the audit if required. So role of the third-party reporting. Third-party reportings are the backbone of the US self-assessment because it allows the authority to verify the income without calculating themselves. So which means like the taxes which is being deducted, that needs to be reported by the third party, which is being directly depicted while calculating the taxes. So if you want to recall it, it's like the withholding taxes or the taxes which is being in the form of the tax deducted as source, which is being done deducted by the payer of the amount that is being deducted by the payer, and then they have to file their return. So once they file their return, the assessee who is responsible for paying the final taxes, that amount will be reduced from his total assessed taxes because that has already been deposited or deducted by the payer at that particular point in time. So similar concept is here, whereby the third party, when they submit their respective return, the taxes are getting populated, which is being deducted by them in favor of the assessee. Then assessee will look at those taxes and deduct that amount while calculate the final tax that needs to be paid here. So this is the concept of the self-tax assessment, which is being very relevant in the US. So move to the next slide. Okay, so as we discussed about the concept of the third party forms, so what we have then done, we have listed some of the key self-assessment form. Largely, this is largely the all self-assess third party forms that needs to be submitted and will be used by the assessee while filing the tax returns. So like W-2 form is who has to report that form? This is the employer. Purpose of the reporting is to report the employee salary and the taxes withheld, and the type of the taxes is federal, state, and the income tax, the payroll taxes. Then we have the WC form, which is being reported by the employer. And the purpose of the reporting is to summary of all the W2 filing to the IRS. Likewise, we have the 1099 form, which is being reported by the business and clients for the report to the contractor freelance payment. And then 10199 for interest, which is by bank and financial institution for the interest income reporting. So all these forms are being reported by the various set of the authority, which are directly linked with the by the assessee while they do their self-assessment, and the taxes which has already been deducted through these form will be adjusted, and then the final tax is being paid by the assessee while filing the return. So this will clearly explain the kind of the forms that are being issued by the various third party. So we'll move to the next slide. Okay, now we'll talk about the tax collection process in the US. So as we speak, the tax collection process, we also know that it is a self-assessment process whereby assessee has to calculate the tax and then do the deposit of the tax, and then the assessment will happen at the later stage. So we'll quickly look at all these steps which are there in the tax collection process. So taxes in the United States are collected throughout the year, not just at the end of the year. Collection happens through the multi-channel system. It's like federal authority through IRS, state tax department, and then the local tax offices. Local tax offices. So what is the step one? So income earned or the transaction occurs. So taxable event happened during the year, which is like salary earned, business income generated, investments getting sold, purchases made, which is sale tax, and then property owned. So these events trigger the different type of the taxes, whether it is an income tax, corporate tax, whether it is capital gain tax, sale tax, or the property level taxes. So this is the first step wherein the taxable event happen or trigger the point where the taxation needs to be charged. So taxes are collected during the year. Taxes are collected in advance through the multiple mechanism. Collection method is what we have done is the collection method here, which is like payroll withholding. Taxes are covered, which are taxes covered, which is income tax and the payroll. The jurisdiction is the federal plus state. So how we have structured this table is that we are talking about the method of collection of the taxes which is covered and the jurisdiction. Likewise, collection method, if it is estimated tax payment, the taxes which are covered under this collection method is the business and investment income taxes, which is applicable to the state and the federal system. If it is a sales tax purchase, this is a tax at the collection method at the consumption tax for the state and the local taxes. Collection method is the property tax billing, which is being done for the real estate tax, and it is applicable for the local jurisdiction. Excise taxes in the pricing, this is being covered at the fuel, alcohol, and tobacco, and which is being administered federal plus state level. So these collection method are nothing but the method through which tax is getting collected. If it is a salary, then it is through payroll and the withholding taxes, payroll withholding taxes. If it is a corporate tax, then someone has to estimate that SSC has to estimate that tax that needs to deposit that tax. If it is a business and investment income tax, then it is estimated tax payment by the person who has done that assessment. So income earned during the year is step one. Step two is the tax collected and during the year. So we'll move to the next slide and see the remaining steps. Okay, now once income has been earned or taxable event has triggered, the tax has been collected. The next step is to deposit to the government authorities. So taxes which are collected are deposited to the government authorities. Employers deposit the payroll taxes to the IRS and state. Business remit the sales tax to the states. Homeowners pays the property tax to the tax county, and the companies deposit the corporate tax periodically. So income has been earned, taxes has been collected, it has been deposited, and then time come for the annual tax filing, which is being done once in a year, which is for IRS federal return, which is form 1040 and 1120 respectively, state income tax return, local property city tax filing wherever required. So as we talk about the event, so return filing is largely annual event for the income tax purposes, but at certain local taxes, state level taxes, it is monthly or quarterly, as the case may be. But largely the frequency for the returns filing are monthly and yearly. And then once tax has been return has been filed, then the settlement process is there, which is has two outcome. If tax paid is greater than the liability, then the refund is issued, and if tax paid is less than the liability, then balance due needs to be paid to the authorities. And last step is the verification and enforcement, whereby authorities verify through the third-party reporting, automated matching, notices and audits, and the penalties and the interest. So all is this being done to ensure that if at all there is some inquiry, some more information is required, that can be done and asked from the SSC, and then the assessment process is getting. So we'll move to the next slide then. Okay, now what we are going to show here is that we are going to show here is the various returns forms and the applicability date when these are getting filed by the SSCs. So throughout the year, taxes are collected in advance to the payroll withholding, estimated tax payment, sales tax collection, and the property tax billing. At the end of the year, taxpayer must reconcile and taxes paid versus taxes actually owned, and this process is called tax filing. So if you talk about the federal IRS, then return filing forms are form 1040, 1120, and key taxes covered here is income tax, payroll taxes, capital gain assess against, and the self-assessment employment tax. State government, state income and this tax return. State income tax, capital gain, and the business taxes are covered in this return, and local government property tax and the city filing, and the property tax, city income tax, and the business taxes are covered here. Now, if you look at the table here, we are talking about federal tax type, which is individual income tax form, which is 1040. Who filed this return? This is being filed by the individual taxpayer, and filing date is April 15, yearly filing. Corporate income tax return, corporate C form, April 15 is the date. Quarterly filing dates are there. Estimated tax payment like April 15, June 15, September 15, and December 15, which is largely a kind of the advance tax which they have to pay. A gift tax is individual making the taxable gift, which is by April 15. Estate tax is executor of the estate 9 months after the death of that particular SSC. Payroll tax return is being filed on the quarterly basis, and monthly tax filing are also there. Payroll deposits like monthly and semi-weekly. Federal unemployment tax is being deposited by the employer. January 31 is the annual filing, and then the deposit dates are April 30, July 31, 31 is January 31. Federal excise tax is the business dealing in the excise goods and services, and these are like quarterly filing dates. And then the information returns, which is a W2 1099 forms, which is employer business and the financial institutions, specifically for the banks. This is being done by the January 31. So this table depicts the various forms that needs to be filed and the time and the date when they have to be filed these forms for their respective taxes. So we'll move to the next slide. Okay. So now that we understand how the US tax system is administered, how tax is collected, let's look at how taxpayer can plan their taxes effectively. So tax planning is not about it's not about avoiding taxes. It is about managing time, cash flow, and the compliance efficiently. So planning area one is withholding tax, estimated taxes. The IRS collect the taxes throughout the year. Planning must start early. So key strategies includes adjusting the form W4 to avoid the underpayment, making estimated tax payment if self-employed, avoiding the penalties for underpayment. So good planning ensures the taxes are paid gradually instead of facing the large bill at the year end. So second planning area is filing extension versus the payment timing. So a very important concept, an extension gives extra time to file, but not extra time to pay. This is very, very important. So smart strategy includes paying estimated tax by April 15, filing the tax later using an extension until the October 15. This helps avoiding the late filing penalty and giving more time to accurate filing. So planning area three is to refund versus the cash flow strategy. So many people aims to large tax refund, but this often means overpaying taxes during the year. So the goal of the good plan tax planning is to avoid the large tax bill, avoid the excess refunds, and maintain the balanced cash flow. Likewise, planning area 4 is to record keeping and the documentation because IRS performs the audits and verification. Strong documentation is essential to ensure that any kind of the information which has been asked for has been given properly, like income records, expense receipts, property documents, etc. And then finally, the compliance calendar planning, which is like successful taxpayers track the key deadlines such as the quarterly estimated tax, payroll tax deposit, annual tax deadline, and various other mere timelines to ensure that taxes are paid in the due course and well within it. So, effective tax planning is about staying organized, managing cash flows, and staying compliant throughout the year. So, this gives us the brief overview about the tax planning. This is the last slide for this particular chapter, and we are going to quickly talk about the synopsis of this chapter in the final thank you slide. Okay, so this is the thank you slide. With this, we have reached to the end of the chapter 2, which is role of the IRS and US tax administration. In this chapter, we learned how the US tax system is administered, enforced, and collected throughout the year. Let's quickly recap what we covered. So we covered the decentralized structure of US tax administration, the role of the IRS at the federal level, how state and the local tax authorities operate independently, the concept of self-assessment and voluntary compliances, importance of third-party reporting, how taxes are collected during the year, concept of tax return filing, refunds and enforcement, the practical tax planning based on the compliance requirements. At this point, you now understand how the US tax system operates behind the scenes. Now that we understand how the tax system works, the next logical question is what taxes actually exist in the United States. In the next chapter, we will move from the tax administration to tax types. We will begin exploring the major federal taxes that every US tax professional must understand, including income tax, payroll tax, capital gain tax, estate and gift tax, and federal excise taxes. This chapter will help you understand what taxpayers are actually paying. Now that we understand how taxes are administered, let's move to the most important question: what type of the taxes exist in the United States? We are going to come up with the new video very soon. So stay tuned. Please subscribe our channel and watch this video and stay tuned for the next session. Until then, thank you and goodbye.